Good morning, everyone, and welcome to the European crossover webinar. And also welcome to non-farm payroll day. We are seeing the dollar, we talked about this yesterday, starting to ease back a bit, and one of the things that we had spoken about. Get to that. Was the importance of this 96.47. Actually, I didn't even expect us to get, really test this or work lower until today. And, we talked about this maybe even a couple of days ago, was that my thought was I thought we'd probably be above here and still hanging around above, maybe around 96.70, and then probably on good numbers, stay above that, and then see if we dip. And then if we close on 2 hour, then we could see some more momentum. We actually broke yesterday as things really started going and turn around. And my thoughts on this is when you look at here with the dollars, that we had this phenomenal run here with the dollar. And let's go in here to the pull this back here. So we had a pretty good run here with the dollar, looking at it over the daily. And there were so many bullish positions, and we talked about this yesterday also, is we had people over the last, 10 days, maybe 2 weeks almost, maybe a little bit longer than that, start to lessen their positions. And generally when you see a market before it has a chance to turn around, and which, like I said, the dollar was certainly the play to go with, the market continued to stay higher. And even though it took a while, over the last, as I said, the last 2 weeks or so for this dollar positions to start to go in and pair back. And I think now that we've seen them pair back, but we made one more last hurrah a couple of days ago. Now we have the opportunity to maybe now start to shift that. And one of the things we were looking at also going into the New Year's, maybe that would happen. That we would start to finally see the dollar pair back. I know there's been some people still saying, it may not pair back. But my thinking is that as one of the things that we've noted here is it's had such, the S&P's been under such volatility. We talked about the interest rates and, where is that differential now? So a lot of things really working against the dollar. I think if we do go and this goes and plays out, and yesterday's ADP was certainly strong, certainly opened the door to think, are we going to take another move even higher with the dollar in light of those strong numbers? But as I said, I think that now we're in a position that if we do get this pullback, then what'll happen is you're going to see everyone talk about just that in itself and say, there was so much volatility in the equity, so of course nobody wanted to be in U.S. assets, and where's that yield differential? And the dollar had been really not gaining any traction to go higher. Some of the things that we've talked about for a while, but now technically, if we do start to get a movement going that way, it will actually open the door, and we'll probably see more follow through. It'll almost be like one reason begets another. Next thing you know, we're pushing lower, and everybody has every reason in the book why now the dollar's going to go lower. And but getting back here is, I'm actually a little bit surprised that we were able to get below the 96.47, so quickly, even before NFP day. And you have to think about it. This is after we had those strong ADP numbers. So really, if you think about it now, you're starting to now see that even when you have good economic numbers, the dollar is still going to lose some of that strength. And so I think now you're starting to see some of these start to not only I want to say pile up, but then what we talked about is that the glass may start to appear half empty now. Might be a little bit, I don't mean as I was going to say a bit of an exaggeration, but I think that that's the way you have to look at it from a technical standpoint, is that the dollar, like I said, we've had a phenomenal run here in the dollar, but once again, now we're kind of open in a situation where now we can start to go in and pair back a bit. And I think that may just be it, is that we just might be just on the on the precipice of maybe that happening. And one of the things to me that was surprising is we'd actually had this move going in the day before. This thing looked like, what the heck, it's going to go higher. Then we get these good ADP numbers, and what happens? We end up getting past what we were referring to a couple of days ago. And why we highlighted this in red is this being a pivot. And I think, like I said, now it's, funny, you're thinking, this is probably going to happen. We'll see what happens on NFP day, and then we'll probably, if we can break below it, then we'll start to maybe work lower. We've already broken lower. We haven't even got NFP yet. And then on top of that, that's on the backdrop of very strong ADP. So you're thinking, like, what the heck? But like I said, some of the things that we've already talked about is when you look here with, with the bond market, and look how we're starting, this move that we've had has really sent rates lower and lower. So you're starting to lose all those things that they used to be able to point to. Remember when when the dollar was so much more stronger, but not that it isn't, it's still pretty close, as we said yesterday, spit away from those highs, which now we've pared back. But we had good reason. Okay, well, maybe the bonds only rallied back a little because they're so oversold. Well, there's a little bit of a decent recovery. And then before you know it, like I said, where's the interest rate differential? And so you're finding more and more reasons. Also, the current concerns with the Washington slowdown. And then also just saw this yesterday. The debt level is the highest ever as of yesterday. As a high. So and those are things that, Steve points about. But these are things that, like I said, that, little by little, you're going to find reasons why, when you look back, I'm thinking, because I think we will get a decent pullback in the dollar. Once again, I don't think it's going to go from here to into the toilet or anything like that. But it's one of the things that when you look back, people are going to look back in the rearview mirror if we get this move lower. As I said, when we're going to be, let's say, if we do come down here, and let's say we take a 95 and we're challenging here at 94, everybody's going to say, oh, yeah, the reasons were so obvious. Oh, it was so clear. And the other thing I'm trying to point out is that I think that I don't want to say you should have that mindset, but I'm thinking if you have that, or you're open to thinking that way, that, possibly we are going to see this pullback. And certainly Steve's made a good point as far as the issues with the debt. But I'm saying when you look at that, you can probably find a lot of reasons thinking, oh my goodness, when you think about that, why would the dollar have still been strong? And I think you're now starting to, we're right there at the precipice of now we're starting going in, this momentum might start to grab some on the downside. And to me, one of the big signs is just yesterday is that you get a strong ADP number. I don't want to say phenomenal, but a very, very good number, a surprisingly good number. And what the heck, we break the pivot? I mean, we actually start moving lower afterwards. Doesn't make a whole lot of sense. We had actually moved higher before that news had even come out. We would been, we really got a lot of people come back for the holiday, and I'm thinking, oh, well, I remember doing the analysis, and then I remember him facing saying, oh, well, 96.56 is real key on the daily. I doubt we'll be able to get past, I doubt we'll be able, we were already above it, but I thought, well, I doubt we'll be able to we'll probably go on and pair back into that. Instead, we end up finishing the day strong, but then look how quickly we turn around and give that back up. So I just thought, like I said, just for a point of context to go on and look at that. Let me go on and take a look as far as the news here, or not news, but let's say economic events. Wait one moment. I've already had some key numbers like German unemployment. And I don't want to downplay those, but just want to get, obviously, the big number, obviously, is in the PDA. Now, we're working a little bit higher here in the euro. I'm not saying these numbers aren't a little bit better, and actually, if you think about the Eurozone PMIs, even still weaker. I guess it's surprising as far as it could be, the old, it could be worse. German unemployment minus 14. Let's take a look here. But what I want to go on and get to is non-farm payroll. Now, last month was 155. They're looking for 177. Okay, on non-farm payroll, let's go on move lower. Unemployment rate. They expect the unemployment rate to stay steady here. Average hourly earnings, I'm beginning to wonder if this, I mean, not saying it doesn't have significance, but before we were with the Fed, as I mentioned before, pedal to the metal, but really pedal beyond, pushed outside the floorboard. Well, I don't think we have. I guess the only thing that would be if we got the average hourly earnings to come in, and they're looking for 0.3. If they came in at 0.4, it'd probably temporarily give the dollar a boost. And the thought would be, okay, well, now there'll be an additional rate hike. Some people are thinking no rate hike, some are thinking one. Well, then it would. People think if we saw 0.4, oh, well, then there's definitely going to be at least 2. That'd be the only, I don't want to say saving grace for the dollar, but be able to push the dollar a little bit higher. We do have Canadian jobs coming up, and let's see, Reuters poll is only supposed to be for 5.5, and let's see here, unemployment rate is 5.7. Just one moment. We also have Canadian producer prices. Now, boy, did we see a change in the Canadian dollar too, also. And we're going to get to that. Hang on. Once again, they're looking for 175. Let's go and move this out of the way. And be one moment, just trying to pull something up. And just a real recap on this, and obviously we saw the big news, obviously with the yen. That was just a huge movement. I just want to go on and get to that real quickly. Not really a whole lot of news. Just want to touch on that before we go into the analysis. And one of the things they're saying, the yen surge is a red flag for world markets. Well, yeah, I think one of the things that we mentioned yesterday also that my thought was about the dollar. Remember, I was mentioning to you that I thought, hey, there's a new sheriff in town, and I was talking about the movement that we saw in the yen. And it says a gradual rise by the Japanese yen in recent weeks culminated in a dramatic overnight surge, firing a warning shot for world markets and the global economy in 2019. Historically, outsized yen gains in short periods, such as the Russian default in 1998 and the global market meltdown in 2008, are a harbinger of stress for global markets. Market watchers say the yen's latest ascent is a sign that the global economy is set for a rocky ride ahead. Signs are growing that the global economy is headed for a slowdown. In an environment like that, the yen tends to thrive. Japan's large current account surplus means global markets considered a safe haven. Global surveys say the show activity in the European and Chinese factories are slowing, and the falling demand forced Apple to issue a rare cut in its sales forecast. This is one of the things that people believe is what precipitated this move. But obviously, as they were pointing out yesterday, we know with the whole issue with Blake and Steve were discussing Stelios as far as algos, but certainly that kept it pushing even further. But it says Japanese investors tend to invest a large portion of their savings overseas and bring the money home during extreme market stress. Sessions lows, the Japanese currency has gained more than 6.5% in the last 5 trading sessions and is best performing major currency since early December. But even as evidence amounts that the global economy is struggling, central banks led by the U.S. are signaling more interest rate increases are coming. I don't believe that here in the U.S. It's just not going to happen. I mean, I think that with everything that's gone on and we're starting to see the slowdown, I honestly don't believe where the Fed's going to go on and raise. I just don't see it. Could be wrong. This Fed's fooled me multiple times, but it tells you a lot that there's a lot of anxiety and nervousness and concern about a more material slowdown in the economy, said Bob Mitchell, Chief Investment Officer of Fixed Income at JP Morgan. U.S. real yields are too high, productivity problems are emerging in China, and the global glut of global surpluses is falling, exposing structural flaws in developed markets. Something that probably Steve would really bite into. Unusually, though, through this time, the surge in the yen has occurred a few months after the sell-off in emerging markets last summer. That suggests the bulk of Japanese investment is concentrated in developed markets such as the United States. Yeah, they were talking about that. I think Blake was talking about that, how the dollar yen, I mean, specifically the dollar yen, if you think about that one, has really lagged despite the falls that we've seen in equities. It says between late March and October, U.S. stocks rose by 13%, the dollar gained more than 9% against the yen as rate increase in the United States and trade tensions boosted the U.S. currency. Now, one of the things that we've even talked about, as I said, as we've continued to fall here in the equities, I don't know who's going to be wanting to say, boy, I'm sure there need to be a whole lot more of these U.S. equities. And probably this move in the yen probably is going to end up, and to a certain extent, strengthening the argument that we'll probably continue to see more volatility here with the U.S. markets, I'm thinking, or have that, what I refer to as more of a downside move here. That I'm thinking that it's going to really have a tough time trying to go back up. It says emerging markets such as the Turkish lira and South African rand felt the biggest pain. The Turkish lira fell more than 7% overnight against the yen. The rand dropped nearly 4%. So really suggests, as I mentioned, that we really have the opportunity for this yen to probably continue to go on and strengthen. And the thought that we almost basically retraced all those highs. Remember, the low was 464 when this thing, when we really hit the bottom, and then but from from day before yesterday, it got down to, what was it, 480. So we just about retraced the entire move. So how quickly that happened. But anyway, let's go on and move on here. But I think this is definitely cover this because this was such a huge move here in the dollar CAD. It mentions the Canadian currency. Well, there we go. So the Canadian dollar notches a 2-week high as U.S. interest rate edge fades. And the reason I'm saying is it's starting to play into this. It says the Canadian dollar strengthened to a 2-week high against its U.S. counterpart on Thursday, boosted by higher oil prices and a narrow gap between U.S. and Canadian interest rates. Remember, we talked about this yesterday. Hey, where's the rate differential? The loonie gain came ahead of the release on Friday's Canada's employment report for December. You think about that. I mean, look how weak the Canadian dollar's been. And now, before the report even comes out, look at this big move that we get in the Canadian dollar. So you're thinking is, once again, we're starting to see those signs. Is that might be a little bit dramatic to say, but once again, I said that maybe the narrative is going to a certain extent to the outlook from a glass half empty to now a glass, not glass half full now to a glass half empty. Can you imagine, as weak as the Canadian dollar's been, and we get that big gain right before the Canadian employment report comes out and the U.S. employment, but more importantly from the Canadian employment report. So you really start to see this fissure with this whole idea of the strengthening dollar. And I think that we can really start to get some momentum going forward on this dollar. We can start to see a good pullback. The Lindy's gains came ahead of the release of the Friday's Canada Employment Report for December, which could help guide the expectations for next week's interest rate decision from the Bank of Canada. Expectations of further rate increases have crumbled after the central bank said last week that it was worried about the impact on the economy of a sharp drop in oil prices since October, but expectations have also faded for further tightening from the U.S. Federal Reserve. They fade in Fed expectations a bit more aggressive than the fade in the Bank of Canada expectations. The gap between Canada's 2-year yield and its U.S. equivalent narrowed by 4.3 basis points. Well, enough of that, but once again, like I said, I thought that you're now, once again, just like we talked about yesterday, this being and was actually from a couple of days ago, this being the pivot, but I was mentioning as far as yesterday, my thought was, hey, look, when we get past, when we get NFP, we probably won't see a break until, because at that time, the dollar was still acting very strong. And I thought, okay, we're not going to go and see a break till, a potential break if we go past the 96.47, which we were considering the pivot until NFP day. But, like they say, something happened on the way, funny thing happened on the way to the forum, as the saying goes. I think, as I mentioned yesterday, this huge, absolutely huge move in the dollar yen, although you can blame it on the algos for moves being exacerbated, and certainly they were. But once again, to me, it reins in the idea there's a new sheriff in town, and meaning that, adios. I think this dollar is going to go on and get a decent pair back. I'm not saying it's going to go to 91 or anything like that, but I think that we should be able to probably get at least, probably about down here to about 94.36. That's, just before I think that we'll be able to start to see some quick moves. So you're talking about about 185 pips or so, 185 ticks, which really doesn't sound a lot if you think about it. And once again, people have made a good point too when you think about the euro. And I think the euro in and of itself, let's look here at the daily. And once again, because it's NFP day, I just want to kind of put what the perspective is on this. I've made the good case that, it's had its own problems. I really don't see where it's going to get beyond 115 or beyond that. It does make some sense. But I tell you what, my thinking here is on the euro is it will find the excuse to move much higher if the dollar opens itself, which I think, I mentioned that before, was that I thought it won't be so much of a euro story as much as a dollar. I think the dollar is going to have to go on and pare back. But I think when it's kind of funny when this thing starts to move higher, I think then you'll hear the talk. We've built a wonderful base. If you think about this base, we could probably move up to 118. Then all of a sudden, if we do move higher, then the talk will be open that the euro can move higher. But we'll see how that plays out for now. But I can certainly see where the thought would be. I don't see how the euro is going to be able to move higher. But if it does move higher from a technical basis, then people are going to be talking about this whole area had built in very, very well, and now we can move higher. Now, speaking of the euro on a very short-term basis, we'll quickly get to the analysis. One of the things that I was, like I said at the time, I'm flat now in the euro. Fortunately, I was able to, with some day trading, that helped, but I was able to get out of my position. I didn't think I was going to be able to get out of my position until the end of P day. That being said, one of the reasons I didn't want to hang on because my thoughts were, I thought the dollar would eventually crack lower. Not crack lower, but move lower and get beyond this pivot. But I really didn't want to go on and be forced out of my euro position, but I almost got forced out of it, in this whole debacle with the yen, was until we got past NFP day. Then I wanted to say, well, God, I guess if I take a good hit, then I guess I'll have to take a good hit. But I'm not going to. Don't want to make any moves until we get past NFP. Not that I expected the euro to have fallen that far as well as it did. And one of the things that was helpful, and we mentioned that yesterday, was that the day before we were able to defend 1342, which remember we had that as a daily until we saw that strong close right at the beginning of the year. But one of the things I will point out too about the yen, and once again to hang your hat on if you're bull or you look at it from a bullish bent. When all heck was breaking loose with the cable, with the Aussie, with the Kiwi, across the board, the euro had every opportunity to take out 13. Matter of fact, if it taken out 13 and got down here, I'd have been just flat out just forced out of my position. I'd probably been one of those people that got clocked out near the lows or something. But the thought that with everything that was going on, like I said, the cable got down to 124 and change. The dollar yen really took a pretty good size hit. But obviously that's a completely different dynamic. But I'm saying when you look at where the Aussie dollar was and how these markets had just really fallen down, the euro had every opportunity to take out 113 and really goose some stops. And if we goose some stops, we could have easily gone and taken out even 1250 and dipped down here. The fact that we held above 13 really says something, really opens the door, I think, for this market to move higher in and of itself. So enough chatter. Let's go on and get into the analysis. Got on my soapbox for a little bit, so hang on. But I want to just lay out the lay of the land, I think, going forward on this. So let's put this here. And this is wrong. I had this. It's kind of funny. The support was higher than the resistance. I got so wrapped up in the resistance and looking at these other markets that I forgot to put the support on the euro for yesterday. So let's go on and get with it. The euro right now. So you thought the euro would probably be weaker in light of the strong ADP we saw yesterday. And look at the euro; it's trying to push even higher. I would have thought, and I was even said to myself in the chat room, I thought the dollar. I didn't expect it to continue to fade. I said, hey, well, and once again, that's what I'm saying. You're starting to see this perception move, even from this point, not vantage point, but from this, looking at this thought process is that, can you imagine going into what's expected to be a pretty decent or good, NFP number? We get a strong ADP, and you're thinking, okay, you'll probably see the dollar on the bid going into the number, blah, blah. And look, the euro's still moving higher. So I'm saying is you're starting to see things start to change little by little. It's like the big ocean liner. And it takes a while to move. It's starting to move, but once it starts to move, then we can start going the other direction. And certainly that looks like what may be taking place. Well, once again, the support here on the daily is right here. You see this here, right there, 1342. So that's important. Let's say we get a strong number. Let's go and take a look at the 2 hour. And I think we have to kind of take a look at where could we go in light of this potentially could be a good number, especially that way the ADP did. And I'm a bit surprised if it does play out that way. Hang on. Well, it's going to be right back here again on this daily. You see that 1342? Well, I mean the daily support, but this is we're looking at the 2 hour. I'm going to go with that 1342. And don't forget, I'll even mark that because that's key daily support also. Now let's take a look here on the upside. Let's go to the daily. And I think we had that marked as before. It's 1469. Well, yeah, here we go. So there it is, 1470. That's not that far away, but that's going to be key if we can close above 1470. And if you think about it, the way the dollar's looking, probably case being made by some people is like, oh, heck yeah, we'll get past that. Well, let's not get overboard. And we know 115 was pretty key from the 2-hour chart, but this is going to be key if we can close above this. And, you know, when you think about it and the way the dollar's acting, we probably can go in and close above that. Let's take a look here on the 2-hour chart. And there's that 115. There we go. So it's going to be 115 and very key if we can get a daily close above 1469. So actually, we may go on to make a move towards this upside of 1469, and then the market may pair back once again if that all plays out, and then we could end up seeing the rest of the day trying to push and trying to challenge that 115. So, but once again, it's going to be key. This is actually ultimately may be your first area of resistance, which would be that daily key level 1469. So when we look at this, you see this coming across right there? 1465. So the market may want to go on. Actually, 1469 is key on a daily. It'll be key if we can close above that. But this is probably where they'll probably, if we get a, you know, depending on how this plays out, probably challenge almost 1465. And then the market, if that plays out, pulls back. And then we're trying to find all kinds of support around 1420, 1417, if it even pulls back that much. And then we start to reassert itself, and the market's got what it's going to have on the upside target, you know, the traders are going to be focusing on then is going to be that 115. But key will be if we can get that daily close above 1469, which I think will actually be the first line of resistance. Let's go and move on to the cable. Like some of these markets, look at this, look at that daily close. And can you imagine, well, obviously, like I said, we had the big shebang with the yen. But, you know, once again, you're seeing these markets start to come right back. Now, like I said, the euro, good thing was it didn't, you know, break out of 113 or break below 113. Like some of these other markets really flush some people out, but look how we're coming right back here. So with the cable, it's going to be, we're looking at the 2716. Boy, I thought we were going to get some good short covering when we got this close above 2716, only to lose all that. 2716 is going to be key once again on the daily. So we're going to mark that off. Obviously be huge if we can get beyond that, but 2716 is still going to be very important if we can close above that. This is good to resistance right level right here at 2682. God, we've already had a very, very good run on this already. Let's take a look at this on a fib. %, right there at 2720. So that's going to be the resistance right there at 2720. which is going to coincide with that key daily level. Support. We get a good US number. It's going to be right there, coming across. Right there, which is going to be 25.77. Obviously some good support coming in here, but once again, along a little bit of an overshoot. We'll put actually right there, 25.88. 25.88. And let's go move into the Aussie. Wow, what a turnaround here in the Aussie. Now, we had that resistance, or at least I was looking at resistance. Remember that key 70.27. I want to look at it, mention a couple of things here. We talked about this 70.27, and yesterday I took a short here at 70.18. I think Irish joined me on that actually at the time, and you know, I noted on there that I was looking to go on in. Let's pull this up on the 5-minute. I'll show you. There we go. Right there. And I put on here, I go that I was covering half at 69.98. Okay. I actually got down towards at 69.93. And actually I was going to go in and cover the whole thing. I thought, you know, I'm always, you know, always leave too much on the table. I'm going to go in and cover half at that 69.98. You can see the low was 69.94, okay, 93.7. And I thought, okay, coming back here, I was looking at, I think it was going to be 85 or whatever. And I came pretty close to just taking the whole thing off. I thought, okay. And then we came back up, and I ended up taking the whole the balance off, took half off there, but ended up getting stopped out at 70.22. So loss was 4 pips on the second half. But had caught, what was it, 20 on the first, but wow, look how this thing has come back. No way I would have thought, and like I said yesterday, I was going to wait till the 70.27. Actually, I think I put it at 70.23, and then I said, okay, I think we've got as far as this market will run, okay, and there it was right here. Look at that. 70.19. I actually sold at 70.18. I think Irish joined me. And then it took a long time. I thought, oh God, probably by tomorrow, once again, with this whole idea that the dollar will be strengthened. Who knows? We'll probably be, you know, 69, you know, 60 or something. I go, so I felt kind of dumb if I just go and take off, you know, I was going to dump the whole thing at 69.98. I thought, okay, I'll take half off at 88 and I'll let the rest. Sometimes it seemed kind of silly when I was thinking about it. I thought, okay, I guess the other half will be at 85. And I'm thinking, well, that isn't much, but okay, I'll just stick with that. But I probably should have done just that. But the thing is that, wow, look at this comeback here in the Aussie dollar. I mean, holy smokes. So once again, it just makes, I know that the whole thing with the yen was, you know, if you want to call it an anomaly, yes or no. Obviously, it's been, as Blake says, lagging with the S&Ps. But look, the thing is, we're above 70.27. We're above that. And think about that. This is right in the face of NFP coming in today. We haven't hit NFP yet, and look at this thing coming back like gangbusters. Once again, to me, it just like people just, I mean, and I probably maybe, like I said, speaking, you know, I'm trying to think of the right phrase, but anyway, it's almost like as if the market's basically, if you think about that, as we go into the NFP, basically just spitting in the face of the dollar. NFP, You had ADP 270. Yeah, whatever. Let me spit in your face while I go on and still rally up against you, dollar. And that's what I'm saying. Even yesterday, as I said, I was thinking, okay, this is probably about as good as the move goes. We'll probably see the dollar going and start to, start to build up a little bit. Not be fading any lower. But look at this. The euro's even moving higher here, and this is all in the face of of coming up at the end of P after the backdrop of an ADP. So I'm saying is you're already starting to see these moves start to take place, and to me, it's a big sign to think these are already taking place even before the end of P, because we had talked about the dollar index and that pivot level. So anyway, getting back to the Aussie dollar, let's go and take a look at what we're looking at. And wow, what an amazing move! Think about that from where it was and to come back here. Obviously, we've got some resistance here, but if the dollar continues to work lower, then potentially we could move up here to 70.72. That's going to be today's resistance, which sounds kind of nutty, but I'm thinking is because this market has come back, and if people are short, they may end up getting the rear end pushed higher. You know what? This is pretty good resistance here, but maybe that's right there. Oh, that's 70.74. We're actually going to go right there. 70.66. 70.66 for resistance. Thinking the market may not, anybody who played it that way may think it, okay, that might be stretching too far to make it all the way up to 70.79. Let's go with 70.66 for the resistance. What a move back. I'm thinking I don't think people were actually long the Aussie, because we were so low. We talked about that this week that I thought, okay, yeah, there's a pretty decent chance we can close below 70. And then the next week we can probably come back below, but beyond. But I'm just thinking, you got to feel bad for people that maybe they were saying, I'll buy at 69.50. And then, they wake up and not only did they get long 69.50, but they actually got short within, a few moments. I mean, not short, but got maybe stopped at, let's say, 100 pips lower or something like that. It's just like, and then to see this market come back is just pretty nutty. Let's go and look at support now. Well, we had that. Remember, I was looking at that 69. My cover was 69.98 because I had support at 69.96, 69.95. So where would support be now? Let's go and take a look at this on a very shorter term basis. God, when you think about the move that we've had already, hard to think they would break all the way here. Let's go right there, 69.73 for support. You can see it coming right across. Let's go move into the Kiwi. This is really surprising. Look at that. To get all the way up above 70.50, unbelievable. Let's go and move into the Kiwi. Now, the Kiwi hadn't taken the type of knock-in that the Australian dollar had taken. Let's take a look here. Resistance on the daily is 67.30. Here's that 22. I'm going to go with 67.41. My concern is that, but we've had these moves that they may get a little bit more exaggerated. If the dollar starts to come in, they may try and push it for what it's worth, and then we pare back just a little bit. So we're going to go actually with 67.41 here in the Kiwi. right there. That doesn't even seem very far. We'll split the difference right here. Yeah, right here. That's not even very far away if you think about it. It's going to be 66, 66. 66, 66. If you think about it, that's not even that far away, 35 pips. But we'll go right there with 66, 36. And let's go into the big move, which was the dollar CAD. Well, during the week we've had this. We've maintained this for the last couple of days. It's 36.44 here, and one of the things I noticed here. Remember, we had 35.69 as key daily support. So once we got past that 30.69, it really opened the door for them to move lower, and move lower they have. Key daily support is going to come in right there at 33.98. But this dollar CAD this CAD is really starting to gain some momentum. So we might be able to go beyond that. But that being said, 33.98 is the support. Very short-term resistance on the 2-hour comes in at 34.13. Yeah, let's go and mark this for 34.13. We know that the key daily support is 33.98. That 35.16, this was good support here. I mean, there was resistance. Look at that. And that, on a short-term, very ultra short-term basis, had held here. We came back now. When we rallied up, we came back and tested, took it out by a little bit. And they went through it without too much trouble. I mean, there was a pause there at 35.06, 35.07. We rallied back to 16, well, actually to 18, and we came back. We're going to go on and, that seems like a long ways from where we're already right now, but we'll use that as our resistance, which is going to be 35.16. Now remember, which was support is now going to be resistance on the daily, 35.69. So if for some reason we got a very bearish Canadian report coupled with a very good NFP, this certainly seems, probably silly to think it would jump that far, but look how we did yesterday. But remember, that was support on the downside on a key daily support. Now it's going to be key daily resistance, that level. If we were, but initial resistance, we're looking at 35.16. Okay. And still, that's quite a ways above this market. I think I just messed up my let me try and reload this again. Trying to figure out what I did, what I messed up here. Hang on. I do have this was a copy, but I had the copy for good reason. Hang on. Well, let me just load up the, hang on. This is frustrating. Oh, there we go. There we go. Whew. Okay, so now let's go into the dollar Swiss. Oh my goodness, we are running so well. If we go over time, we go over time. Try to do all this analysis. So hang on. This may be a little bit of an extended European crossover, but I thought it was important that we go over and get a good preparation, or maybe not, but a good perspective what we think may happen. We'll see what happens overall. Looking at the Swissy. Oh my goodness, time has flown by like crazy. Resistance is going to be 98. Let's go with 98, 96. Now I'm all thinking about the time, and I don't want to extend this too much. 98, 96. I cannot believe how quickly the time has gone by. This is amazing. Support right here going to make it fairly, I don't want to say it's fairly simple, but right there at 98. Well, no, once again, I think the dollar could be under some pressure. 98.36. Let's go to dollar yen. Unbelievable. Unbelievable. I think this move was so fast. I remember looking at it. Even on a 30-minute, you don't see. Man, I think any moves up here, people use it as an opportunity to get out. Could we get up that high to 884? You wouldn't think so. And it just cascaded from there. Right there, 866. 866. I don't know if you can see that. Let's pull this back. Right there. It popped back up, and then it quickly. So let's go with 866. Support on a short-term basis, 754. And that's on a very short-term basis. Let's go with the dollar index. We've already talked about this. It's 96.47. 96.56 was key on the daily, so we're going to say 96.56 key daily. But your resistance, the pivot, here's the pivot. We've been talking about this. We'll put the resistance, there it is. You see that right there? Even here is important here. 96.56. You can make the case for even higher at 96.72. If we were trying to hit those high, if we saw some kind of crazy number like let's say 300 or something. Obviously, the ADP was so strong, but 96.72 was really where the market would really be surprised to get up, to be able to jump up that high. But that is a resistance, 96.72, but 96.56 is the key daily. So we'll stick once again with the technicals. I don't think it's going to make it up that high, but it's going to be 72. 56 is the daily resistance. Well, this is still key, this pivot. Support is going to be right there, 95.64, which is basically where they came down here. It's going to be 95.64. Well, we did make it up. You see, this is what I've been talking about. Here's that zone. I've been pretty adamant about where I thought this market would go to, and I think there's a opportunity that we can actually go above 1,300 a day. The top of this range here is 1,304. I'm going to go with resistance here at 1,304 because I think we can clip 13 and push it. I wouldn't be surprised if we get something like 1,307 or something. I'm not saying that's all going to happen today, but if we do get a close above 1,300, I think you'll see some more follow through into Monday, and then maybe not till the early part of Tuesday, we can then see the market start to even up a little bit. But I think the market's going to really get excited, especially with the volatility we've seen in equities. People are going to start thinking, boy, a good place to put your money is gold. Gold for safety. I don't think they'll be worried so much about appreciation. Well, there'll be some concerns about appreciation, but as much as, you know what, I think I'll put it there. Gold seems to be steady. It's moving higher where this equity market is just going down, 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 down. But then you'll start to see the technicians make the case for a much higher move. But we're going to go with 1,304 for resistance. On a little bit of a stretch. Support we'll go with 1283. I think we had that marked off yesterday anyway. Yep, we did. Let's quickly go to the 30-year bond. We're already over time. we go. These moves have been, look at this. This is unbelievable. Look, 48.27. We just keep taking out these resistance levels like nobody's business. Look at that, 48.02. The market, remember when I put that there, it started to pair back, and look, we just reasserted ourselves. Resistance, so it's going to be right there, 48.17. Support comes in right there, 47.09. 47.09. I think we had 63.86 here on the bun. Let me take a look here. Yeah, 63.83. I just don't know if we're going to come down that 63.51. That's a pretty big heck of a move. Yeah, and good support there too. Well, on a short-term basis, 63.68. With resistance breakout area here, which is 64.09. Now let's get to the DAX. Keeping it simple, resistance be 649 with support 525. And that's the bias chart for today. Good luck with NFP. I'll go on and get this posted. And thanks for joining us here on the webinar.